Here's a recent, unfortunate, but also a little bit funny case. So this guy was a partner of an accounting firm. He finished up in 2004, was doing some stuff, and his girlfriend at the time said, "Hey, would you like to invest in my casino junket business?" Business plans looked excellent. Casino junket businesses make more money than casinos. That's a pretty well-known fact. This guy proceeded to go into enormous debt to invest $18 million into his girlfriend's casino junket business. But the twist is that there was never a casino junket business. She just simply took the money. On top of it, this guy earned about $6 million in personal services income for a few years in there, which he didn't report. Again, this guy was an accountant, and I don't know if he was a tax accountant because the name is sealed, but he still probably should have known better than to not report the income and maybe get some advice on the crapload of interest deductions he was claiming on these loans where he got scammed and there was no income. I assume the thinking was, I borrowed money to invest in a business that was supposed to produce income and it just didn't work out. But in this case, because there was never any business, which is a fact that he didn't know, it means that that interest was not deductible. What's not clear is tax returns were lodged for 2008 to 2012, and the ATO issued amended assessments in 2017 outside the period of review. So either they lodged them very late or they consented to it. I doubt they would have consented to it though. So this went all the way to the tribunal, and the taxpayer argued, hey, I took out these loans, I incurred this interest to make assessable income in this business venture. It just didn't work out. It's still deductible. These can have losses. That's fine. However, there is no provision that says if you believe there's a profit-making intention, because he really just loaned money to his girlfriend or gifted it to his girlfriend or whatever you want to call it. And there was never any prospect of making any income. And because there was never any prospect of income, there cannot be a nexus to income pretty clearly. But the semi-unfair bit is he obviously couldn't know that because he was getting scammed. Now, he probably could claim a capital loss for all this money, including the interest, if it wasn't deductible. But if he didn't have any capital gains, they're kind of useless. Anyway, ATO won, and they also applied 75% penalties for intentional disregard, which is a bit wild. But I guess this guy was a professional and he should have known better. That's often what they say when they apply that penalty level.